In my series, Algo versus Crap, I publish multiple videos trying to combat the junk on YouTube of all these channels that usually they test an indicator or a strategy for 100 trades manually over sometimes 5 minutes, which takes the strategy, let's say, a month to come up with 100 trades. And then they compare everything together in the same basket and they say, okay, this indicator is the best or that strategy is the best, which is, of course, crap, hence the name Algo versus crap. Now, to combat that, I came up with a benchmark, basically a certain rules to test these indicators so you can compare them apples to apples. Because you cannot combine RSI2 with momentum 15. That will not work. This will produce 80 trades and the other one will produce 200 trades even on the same time frame on the same instrument. So I built a portfolio of 36 markets. These markets cover everything: equity indexes, crypto, currencies, interest rate, agriculture, soft, meats, energy, metals. Each market has 16 years of data. So far, I tested 11 oscillators. 7 of them are in this database. So each oscillator with 4 speeds. The 4 speeds come from really slow to really fast. So what I did, for example, RSI2 is really fast. So let's say you get 400 trades using RSI2 on the ES. So to compare, for example, the CCI oscillator, you need to come up with a speed that generates 400 trades. So you can compare both equally. You cannot use CCI 30 to compare with RSI2. So for all these oscillators, I put these benchmarks. So really fast, above 400 trades, and slower, 300 trades, and again slower, 200 trades, and the slowest speed producing around 100 trades. So these are not exact, but around 100 trades plus minus 10 trades. Then I took all these indicators, test them long or short separately. And then I test them with exit end of day or using multiple exits, which is 4 bars. So you enter, you exit after 4 bars, plus a profit target of 2 ATRs or a stop loss of 4 ATRs. So why ATR? Because I want to normalize everything. I'm not picking the best strategy. I'm just trying to compare the indicators together using the same KPIs, same metrics. So here we can do a quick math. So each indicator has 4 speed times 2 exit times long and short. That will come up with 16 variations for each indicator for each instrument. Times 36 instruments, we have 576. So far, 7 indicators will produce 4,000 strategies and about 1,000,000 trades. Now, as you can see, those are not really done strategies. These are just indicators. And you can see the average profits for a strategy is minus 1,500. Now, you might ask, why go through all this trouble to build this database and it's not even profitable on average? And here is the benefit of this research. I totally believe in marrying the right strategy style to the right instrument characteristics. And I mentioned this many times on the channel. Basically, we want to marry a mean reversion strategy to a mean reverting instrument. So this database will show us what work on which instrument, and we can tell because we can find really a raw edge. So a raw edge, that means the strategy will produce profits on multiple speeds on that instrument without any filters, without nothing. Remember, these indicators are not strategies. We're just going long or short, exiting end of day or exiting after 4 days. So since I am always building long strategies, I will choose to build short strategy today. So I will filter this database on the short side, and we need to pick strategies that generate at least 100 trades and at least $100 per trade. Now, $100 would be a lot for some instruments and will be just okay for some other instruments. It doesn't matter because we are looking for an edge. This is not a strategy. So we are down to 191 strategies. And if I sort on the indicator, and of course you already know what I am going to pick because the title of the video is the commodity channel index. So let's pick that. Okay, so we are down to 26 strategies. These are strategies that are short only, using the CCI only, with a minimum of 100 trades and a minimum of $100 on average per trade. Now let me sort by market, and we can see that the Japanese yen has 4, natural gas has 4, and the VIX index has 3. So let me pick the natural gas, and we can see the natural gas produce good results with end of day, multiple exits with 3 speeds. So this is fast, medium, and slow. Now remember, this is an edge. So we just discovered there is an edge in using CCI with natural gas on the short side. These are not full strategies. And I'll show you why this is an edge, because you might say, well, this is optimized, and it just so happened that luck produced these profitable results. So this is StrategyQuant X in Algo Wizard, and I just added the CCI 8 period. This is the medium speed greater than 130. So I just picked the medium speed, 8, 130, and multiple exit. Now, all the indicators I tested, as I told you in the beginning of the video, they are using the same multiple exit, which is 2 ATR for profit target, 4 ATR for stop loss, and 4 bars to exit. This is so we can compare all indicators and we can find raw edges without optimizing. Now, SQX has a little quirk, and 4 bars means 3. So just keep that in mind. So I'm exiting after 3 bars, 2 ATRs, the 10 bar ATR for profit target, 4 ATRs for stop loss. There is nothing else, no long entry, so this is just short. And I am using the daily bars from January 2006 all the way to end of March 2023. 1 contract, no commission, no slippage. Again, this is just to find the edge. We know it's profitable strategy, and here it is. Now I'm going to prove to you that this is not a optimization. I can change this to 6. Remember, the slowest speed we have 4. So let's go with 6. Profitable, we know 4 is profitable. And let's go with 10. Profitable, and we know also 16 is profitable. So all speeds are profitable. Also, I can change this to 100. Still profitable. And I can go to 150. And still profitable. So you can see this is not an optimization. This sits in the middle. In fact, you can see that it is not the best performing strategy. Also, this applies here. So if we go to the exit, so right now we're making 172. If I do this 4, that means I hold 1 more day. You can see now I'm making more money. And 5, again, more money. And if I go the opposite side, 2, I'm also making even more money. So 3 is definitely not optimal. And we can do the same thing here. So instead of 2, I can go with 4 and 8. That means double the ATR for profit target and stop loss. And you can see I'm still making good money. And I can go half. That means 1 and 2. And it's, so you see, it, anyway I cut it, I'm profitable. So this is a huge edge. So on its own, this is a gem. I just gave you like a gold mine. Now you need to make money with this. The way I found this is through research. Research at the end pays you in profitable strategies, so you can make money of it. And I'm happy to share this with you. So now we know natural gas, CCI, all speeds, short side, daily bars, all profitable. I don't care what you do with it. It's all profitable. Now you just need to make it robust enough. And this is what we will do using StrategyQuant X. And to do this, we are going to build a template out of this. So you start by going to settings, advanced, and switching this on. So this is now a template. And we will add a random condition for the entry. And we will add another random condition for the exit. That's it. We save this and we bring it into Builder. So what is this? That means we will add a random condition to filter the entries and a random condition to exit. This random condition to exit can be used with these intact because we know all these are profitable regardless of how we use it. But if there is a random condition that makes us exit before this, then we will take it. So this is the CCI template and it's short only, and we will use a random condition to entry. So we will force it. We want one random condition to enter. For the exit, we will not force it. So 0 to 1. 0 means sometimes it will not pick any condition. Because remember, we already have a 3-day exit or a stop loss or a profit target. Now, it doesn't matter what you do with stop loss and profit target. It's already built into the template and you cannot do anything with it. There is no cross check. And here is my ranking. So I want a profit factor above 1.3, stability 0.7, average trade above 100, and more than 65 trades. Now I am building 200 trades only. I'm saving 200 trades only, but I'm building up to 2,500 strategies, meaning it will keep generating strategies to improve on those 200s. So let's start with, and remember I'm using TradeStation, and we will use the daily bars because that's what our edge was based on. So it's like 2 seconds to come up with these trades. And now remember it's 200, but now it's finding better strategies because we're building up to 2,500. Let's see. So we have this one, which is making 208. Remember the original one made 172. So it's 9 return to drawdown. Let's try to beat that number. And let's go to return to drawdown. So we have 19, 15, in fact, the top, we have many that beat 9 out of the 200. So almost half the strategies beat the original strategy. Just to confirm, so let's see the code. So you see the code is fixed. 3 exit bars, 2 profit target, 2 ATRs, and 4 ATR stop loss. And you can see all of them are the same. They're not changing. The only thing that's changing is the conditions that we have here. So this is super trend. This is Haken Ashi. This is the close daily is higher than the session low. So these are the filters that we added to enhance the strategy. I can go one step further because remember when I change all these, the number of days or the ATR multiple, they are all profitable. So I might as well change that. And the way to do this is you make this generate randomly. We save it and we load it in Builder. So let me clear all these. So this is now the strategy CCI with random exits. And now I can play with these. So let's do 1 to 5. So instead of 2 and 4, I mean, let's go with even 6. So 1 to 6, the multiplier, and the same for profit target, short only, and same one condition, same everything basically. I just changed this. Remember, I didn't mention this, so I'm using all the blocks. So you can see here 461 blocks. Now, the numbers of bars to exit, so we change the multiplier of the ATR here, and we change the exit after number of bars here. So let's do that. So let's change from 1 to, I would say, maybe 12 in step of 1. So that should be enough. I mean, I don't want to hold more than 12 days. Remember, these are 12 trading days. So this is enough, and let's test. Again, it already built 200, and now it's finding better strategies up to 2,500. Okay, it's done. And now let's sort by return to drawdown. And we can see already we got better strategies. I mean, yes, the net profit is down, but remember, return to drawdown, that means our drawdown is much lower. And if we check now, we can see the source code. Now we have a different parameter. So see, this is now exit after bars 2. The multiplier has changed. And let's go to the next one. This is 5 exit number of bars and 2.5 and 5.4. So you can see we are changing the exit number of bars and the profit target multiplier, the stop loss multiplier, plus we are adding the condition for entry and condition for exit. So this is great. We have the original template. We know that it's not optimized. In fact, we changed the numbers and we saw that we can get better profits if we change it. So we know we started with a really good edge. We just added one condition for entry, sometimes an exit condition, and we already got much better strategies. Of course, now you can take this into robustness and you do your own robustness testing. And instead of just randomly running SQX and trying to find the needle in the haystack, this way you are so focused, so laser targeted on what you are building. You found a raw edge and now you're just trying to enhance it a little bit, keeping it robust and finding a good strategy. To learn more, make sure to watch this video and I will see you there.